All right, hello. We are here today with Thomas Smale of FE International. He is the founder. And Thomas, can you, well, first welcome, but can you give us a little bit of a background on your history and how FE came about and kind of what's going on with y'all?
Yeah, hey Garrett, thanks very much for having me on. So we started the company in 2010. At the time, we were buying and selling websites for ourselves. And then around that time, we launched an e-course to teach people how to buy and sell websites for themselves. Off the back of that course, which got very popular, we had a lot of great feedback from people. Some people went through the course and they said, "Hey, I've read the content; it's great, but can you just sell my business for me?" Which wasn't really something we'd ever thought about doing before. We thought we would just teach people and continue doing it ourselves, which had been very profitable for us. So off the back of that, we figured, well, why not try selling a business for somebody? So we did our first deal back in 2010, and then for the next 2 years, we continued buying and selling ourselves. We continued teaching people. We continued brokering, and then when we hit the end of 2012, we started to focus like pretty much just on brokering. So since then, that's basically been all we do. We do buy and sell some businesses for ourselves still. So we still have a seven-figure portfolio of SaaS and content-based businesses, but that's very much not core from the main business. It's really just a cash flow thing for us and keeping up with the industry. We've always found that clients, whoever they prefer working with someone who's actually like been there and done it.
Hmm.
It doesn't make too much sense to offer a service in an industry if you don't actually do it yourself.
Yeah.
So that's always what we've done.
I love this story because like it's the same thing when I talk to SaaS founders. So many of the businesses that are successful didn't start out like let's go build a business. It started out with one thing, and then in your case, kind of giving away education and feedback and learning, and then the demand kind of pulled you in a direction rather
Yeah,
than you didn't set out to do something. It just kind of happened by virtue of doing what you were enjoying and having fun with it and sharing knowledge and that kind of thing, and then the business just happened.
yeah, absolutely. I think a lot of businesses naturally pivot based on the demand that comes in. And I think if you start with something like a course, it's quite open-ended and there's lots of different ways you can go with the business. So we just naturally went with what people were asking us for. It certainly wasn't what we thought we would end up doing, but there was a lot of demand for it and we were quite good at it. So it made a lot of sense to focus.
Yeah. Well, I feel like pivot's one of those words. In a way, it's gotten a bad name for itself because it's basically more of a, oh, my idea's not working. Let me try another idea. Whereas you're not pivoting, like actively turning. You're getting yanked in a direction because there's just demand there and you're filling it, right? Whereas a lot of times it feels more like pivoting's like, okay, this isn't working. What else can we try? Quick, hurry.
Yeah, I think the word does tend to get used interchangeably. But I've seen like tons of successful businesses that have started out doing one thing. I guess it's just the next step in the
Yeah.
evolution of the business.
Yeah.
So yeah.
One of the things, and I want to kind of tell a quick story about working with y'all before asking this question.
Mhm.
Um, One of the things that when I first talked to you on the phone, I don't know, this would have been what early, early this year, or wait, no, sorry, or late 2015.
Yeah, it would have
Um,
been middle to the end of
yeah,
2015.
somewhere around there. Talked to you, got on the phone with you, and asked you some questions, and at the time, just completely on guard, wary, not trusting at all. Like, okay, come on. The only reason I even considered calling was because I talked to Patrick McKenzie, and he had nothing but great things to say, and I was still on guard. And I talked to you, and then you basically said everything I could have possibly wanted to hear, and I'm like, this sounds too good to be true. Like, this sales pitch is too effective. Like, all right, Patrick said good things. Everything they're telling me sounds good. Let's do this. And went into it. And over time, y'all definitely kind of earned my trust. And then, especially once, so we had our first deal, which we walked away from on closing day. And at that moment, when y'all were literally a signature away from getting paid, um, I would have expected some pressure to be like, it's okay. Let's go ahead and concede this and, close the deal. You may not get another deal. Take it, and there was not even a breath of that from David or any of y'all. It just was, yeah, that sucks. Okay. You're making the right decision. Let's move on.
Mhm.
And so at that moment, it was kind of, even though it was going to be a whole heck of a lot more work for y'all, slimmer chances that maybe, the commission was going to be lower because the value of the business was ended up being lower, and it did. So that to me was just kind of like, all right, they get it. They're not here just to flip the business and turn it and get their check and move on. Like, I really felt like y'all kind of stood by that. So for me, it took some time to kind of wear me down being a skeptic. Is that I feel like I don't know if it's a terminology of brokers or just the business. Like, there's probably a lot of people out there that have made a bad name for the industry. Is that something y'all encounter a lot? Is there any advice or kind of knowledge and context you could give people about just kind of helping them understand the bigger picture and see kind of where y'all fit in and why y'all do things the way you do and that kind of thing?
Mm-hmm. Yeah, I mean, I think brokers in general, whether you want to call it a broker or an advisor, they do tend to get a bad rep, mainly because there are just so many bad companies out there, to be honest. And calling yourself a broker or advisor, there's no like hard and fast rule as to what means you are a broker. I mean, you could technically just do it yourself from home with no experience, and from a seller perspective, you don't really know the difference. I guess that was part of the inspiration for actually pivoting, if we're going to use that word again, in 2012 and really focusing on it. I think we found that just our general approach had meant we got a lot of word of mouth business. And I think if you get word of mouth business consistently, then that's a pretty good sign that you're doing things the right way. But we certainly get a lot of resistance to people. I mean, our approach, I guess we are a company that we have to sell people firstly on working with us and then actually sell the business. But I wouldn't say any of us internally, we wouldn't describe ourselves as salespeople. We don't really do any formal sales training or anything like that. So when we initially speak to sellers, it's very much just a case of building credibility and being very honest with people. But we've always kind of prided ourselves in giving people the right advice. So whether that means walking away from the wrong deal or being like very honest with the valuation. Often people come in and they say, we might value a business at $1 million, and they might say we want $3 million or something like that. And the temptation, particularly when you're starting out, and for a lot of the smaller brokers, the temptation is just to agree, try at that level and see what happens. But I mean, so we have a 95% success rate for deals we take on, and that's only ever increasing. And that's really down to just being like very honest with expectations. If we don't think it's a good fit, then we're going to be quite honest about that. And I think that's quite important. So I think advice-wise, if you look in seller business, regardless who you're working with, I think just be a little bit skeptical if there's someone you're dealing with who basically agrees with everything you say. I mean, part of the reason you hire a broker in the first place is they are the experts. So if they're not giving you any pushback on anything, whether it's valuation, process, sales time, other expectations, or also like anything related to process. So if you work with us, we have a process, and we're not going to change that process based on what the buyer or the seller wants. So I think that's quite important. It's pretty much impossible to consistently sell businesses if you are constantly changing the process. It's not very scalable. It's not very predictable. And just in general, I think we'd be doing people a disservice if we just agreed to everything they said.
Yeah, absolutely. So is there kind of a threshold that or key criteria that you would say if somebody's thinking about like, oh, can I get out of this for whatever reason? I mean, is it a revenue point, or kind of what's that determination about whether a business is viable to even be sold or to use a broker, to justify using a broker?
Yeah, so I mean, we look at a lot of different factors. I mean, I guess the caveat would be it's always worth a conversation. Most people will be pretty honest with you straight away if it's going to be a good fit or not. Okay. I mean, some of the main things we'll look at is making sure the business is at least 12 months old. We get a lot of people who come to us with a product they launched 3 months ago, and they say, oh, look, making X amount, can we sell it? Well, there's obviously always a possibility that business could be sold. We've built our reputation on selling businesses that are profitable and at least a year old. So we tend to shy away from those. In terms of size, I mean, we have a real range of experience internally, and a team that deals with businesses anywhere from $20,000 up to $10 million and above. So size-wise, as long as it's profitable and making more than about $1,000 a month net, then we will usually take it on, at least from a size perspective. One of the things that comes up, particularly with SaaS businesses, that means we quite often walk away, is where the business is super reliant on the owner, whether they've done all of the coding or the programming themselves or the running of it. And if they are full time on the business, that can be quite challenging, particularly with smaller businesses. So if there's a product making, say, $5,000 a month, and the owner's spending 20 hours a week on customer support, 20 hours a week on programming and development, then that's going to be quite a difficult sale. So that's one of the situations where we would then work with people maybe on a 6 or 12-month plan to transition themselves out of the day-to-day, processes, documenting the code, and making sure from a buyer perspective that anyone could come in and run that business. So I'd say they're the main things with SaaS businesses. I mean, we do look at hundreds of different variables, but they're probably the main ones that come up.
Yeah, well, that makes a good case for just automation and documentation so that the business isn't so reliant on you. And the nice thing about that is all that work is useful to you, whether you sell the business or not.
Well,
So
yeah.
it's just a great way to invest. I mean, I've got a whole chapter I'm planning on writing about automation and kind of documenting processes, because as good as Sifter was about that, in hindsight, with all the due diligence, it's like, oh wow, I really could have done better there.
Yeah.
That due diligence is a great process regardless of selling the business too. I think when you're forced to really analyze your business and look at it from a more quantitative perspective instead of just a product owner looking at your baby, it gives you a lot more insight.
Yeah, you definitely get that raw feedback that you wouldn't get yourself, or maybe from like friends and family. It's quite difficult to get that until you actually have someone who doesn't know you, and they're just looking to buy the business. So yeah, absolutely. And things with like systems and processes, basically everything we advise people during the exit planning process, if they're not selling right away, it's something that will increase the value. And if it's increasing the value, it's making the business better in general, whether that's making more money or spending less time, which I guess for almost every business owner is a goal.
Well, and I can imagine it can also have a good impact on decreasing the transition time and your need for involvement after selling the business, and kind of make it easier to extricate yourself and move on.
Yeah, I mean, it certainly helps. Like with a training period, you're much more likely to negotiate a shorter training period if everything's documented and you're not really involved. If you are working 40 hours a week on the business and nothing's documented, then it's going to take a lot longer. So it's much better to do it once, because you're only going to end up doing it at the end of the process. And by that stage, you've probably already had to take a lower offer than the business owner who's already done it and kind of ready to go.
Yes. Yeah. So somebody's looking to sell their business. We kind of might have touched this. What kind of one or two key universal pieces of advice would you have for them, just to make a decision about, should I sell, should I not sell, and kind of what should I be doing to help make that decision or prepare for it?
So I mean, I think the first piece of advice is start a conversation. I always encourage people just to get a valuation, even if they're not necessarily thinking about selling. And it's very difficult to make a decision whether or not you should be selling until you know what it's actually worth. And then from there, most sellers we deal with tend to have one of two goals. It's either a timing-based goal, so I need to sell the business by December, or a value-based goal. I want $1 million for my business. Or some people will have a combination of the two. So I want to get as much as possible for my business in the next 6 months. What do I need to do? So once you've done that, you're going to be in a much better position to establish whether or not it's the right time to sell. I think other than that, it's very difficult to decide until you know where you are now and what you're working on. And through the valuation process, it's also like a pre-assessment as well. So we pick up on a lot of things that people can be working on. So if someone decides now's not the right time to sell, and we'll give them 3 to 5 things to be working on over the next 3 months, 6 months, 12 months. That means when they do come back, that business is going to be more sellable or more valuable.
Yeah, puts them in a better position.
Yeah, exactly.
And so what about on the flip side with buyers? What would you tell buyers to zero in on, or I guess what do you tell buyers when you're working with them to focus on, and what makes for a healthy recurring revenue business?
Yeah, I mean, I think one of the first things for a buyer is figuring out what you can and can't run. So if you're not a developer yourself, and you're looking to buy a technical business like a SaaS product, um, then you need to make sure you look for a business that either has a team already in place, or maybe you should partner with someone or look to hire someone quite early on, particularly for the due diligence period, because from a seller perspective, things might not be that well documented, and you really want to go through the code, or at least a sample of the code that will usually give you access to in that period, and make sure you have a good understanding of it. From there, I think it's really just a case of finding a business that's a good fit with your skill set. So while you might not be a developer, you might be a great marketer, and you might be a business where, particularly in the SaaS space, sellers tend to be below $1 million. They tend to be very much developers first and marketers and business people second. So there's often some opportunities for people who come in with a different skill set to improve that business. So I think figuring out what you're good at and where you can add value is quite important. There's no point buying a business where you don't really understand any of it and nothing you know about is going to be relevant to that particular business. I mean, you could do that, but I would always advise people to pick something that they're interested in, or they have skills that can be worked on. I think the other thing as well, particularly if you're going to buy through a broker, is be quite clear and honest, open on. Much like with sellers, we encourage them to speak to us as early as possible. If you're looking to buy a business, then be quite clear, firstly, like what you're willing and able to spend. There's no point sitting there with $100,000 and looking at $1 million businesses. You're just kind of wasting everyone's time. Yeah. And also a good understanding of your time horizon. Like, I never encourage buyers to rush through the process. And while we do sell businesses quite quickly, particularly in the SaaS space, doing your research, maybe that means looking at different businesses and prospectuses for 6 months before you make a decision. I think that's important as well, particularly if it's your first acquisition or a large acquisition. There's no real prizes for rushing through that process.
Yeah, for anybody, for that matter.
Yeah.
Is there a certain trend you see amongst buyers? Has that kind of changed over time? Do they tend to be fewer technical buyers, or people who aren't necessarily technical, or do they is it just really all over the board?
That's a very good question. We have a real range of buyers. We have tens of thousands of qualified buyers on our list, and the skills they have will really vary. I'd say most people in the SaaS space will either be technical themselves, already have a team, or they'll have a partner or like a trusted employee who is technical. So it's quite rare to find someone buying a SaaS business who has literally no technical experience or access to anything technical. I'd say one of the main trends as well is more and more formal funds, whether that's like a venture fund, a private equity group, private investors coming into the space and probably lowering the size of businesses they were looking for. So traditionally, a lot of investment groups won't look at businesses below $10 million, say. And we're seeing quite a few sales, particularly 500,000 and up, where they're actually bought by investor groups that previously wouldn't really have been looking at that level, mainly because there's just so much potential with a lot of these businesses. They can be fantastic products, but often just run by a single founder, and with a marketing team or a development team behind it, some of these businesses can really grow quite quickly.
Yeah, absolutely. What's the biggest or most common mistake you see when people reach out to you and you're looking over the prospectus after it gets put together? You're talking to them. What's the most common or most important mistake that people make?
Is that from a seller perspective or a buyer perspective?
From a seller. So I'm, as a product owner, I'm coming to you, and you're looking over my business. What did I do wrong?
Yeah, I'd say probably one of the most common ones, like regardless of business model, regardless of size, is not tracking financials properly. We usually spend a lot of time working with owners preparing their financials, whether it means they don't have their books in order at all, or they might not understand their finances, or maybe there are some like commingled finances from other businesses, which is quite common. Like quite often someone will have maybe 3 products under one LLC, and if they're just selling one product, then there might be some costs. Like for example, they might have a developer who works on 3 businesses, and you've got to figure out what the relevant cost is. So I'd say anything like financial related, it's very rare to find financials where we get sent them and we kind of use them as they are. There's almost definitely some back and forth
Makes sense.
on various adjustments. Um, Another thing is metrics. I mean, I definitely see that sellers have got better than this over the last few years because there are various tools out there you can use to track SaaS metrics, but not knowing those won't necessarily stop a sale, but we would definitely need to figure them out before we get listed.
Yep.
Buyers are often like very interested in metrics like churn, lifetime value, anything like that. So the better you track those, and the more transparent you can be, then the easier the sale process is going to be as well.
So what I mean, is it as simple as founders should get a bookkeeper involved sooner, or a CPA, or what would you be your specific advice to help mitigate that and how they could go about it?
Yeah, I mean, I think generally speaking, particularly for the size of businesses we deal with, you don't necessarily need an accountant to be doing it. It's really just bookkeeping.
Mm-hmm.
I think accounting is more relevant when it comes to paying your taxes at the end of the
Yeah.
year, finding relevant write-offs, which isn't really something we deal with in the sales process because we don't take tax into account
Yeah.
at all. I mean, a buyer might do from their personal situation. So it's really just bookkeeping, just having someone who does your books on a monthly basis, keeping them up to date. And again, much like we were saying with processes, there's almost no situation where tracking your numbers better on a monthly basis is going to be bad for business.
Yeah.
It might be an extra expense that you might have previously done every 6 months or every 12 months. But if you can do it on a monthly basis, then it just makes things a lot easier. And generally, bookkeepers aren't a massive expense.
No.
Accountants can be quite expensive, particularly if you've got quite a complex tax situation.
Yeah.
But just preparing your financials for a sale really shouldn't be that complex. It's just a case of getting started. Where it can get quite messy is if it's not done for 12 months and then
Yeah, you got to play catch up.
a bunch of like receipts and invoices and you're like, here's my numbers, which doesn't really work that well. Yeah, so just get a bookkeeper involved early. And it really doesn't need to be complicated. It's not like we do an extreme amount of detailed financial analysis down to the cent. It's just a case of like having it all in order.
Yeah. Well, and anything that isn't in order or kind of looks off is going to raise red flags, slow down the sales process. If it slips through, and ideally none of that slips through the cracks, but invariably things come up like, wait a minute, what was this about? Why is so? I think it's one of those things that it just like process, it's going to pay off dividends whether you sell or not, but especially
Yeah,
if you eventually sell.
yeah, absolutely. Yeah, things like documentation. I mean, we do as much verification as we can
Mm-hmm.
pre-listing, but often there are things that might come up mid-process, like a cost that's been forgotten about, or a buyer doesn't like the way costs have been allocated in a certain way. So yeah,
Yeah.
the earlier that can be flagged, ideally we'll figure all of that out pre-listing, which is why I mean a lot of people who work with us often, like some of the feedback they say is they spend a lot of time with us up front, but that's very much intentional to make sure that they're in a good position when it is listed. There's nothing worse than getting halfway through the process and finding out there's problems.
Yeah.
Much better out figuring that out at the beginning of the process.
Is it fair to say that more often than not, the buyers are going to be more financially savvy than the sellers and be better at spotting those things just from their history and the nature of the fact that they're on the buying side?
Yeah, I'd say so. I mean, I'd say the majority of buyers probably have an investing background. So a lot of
Yeah.
buyers we deal with might probably invest in real estate is quite a common
Mm-hmm.
like profile we see. And often bear in mind if you're buying a business, so let's say you're buying a business for $1 million, chances are $1 million isn't all the cash you have in the world.
Yeah.
You may well have say 10 million in invested assets, which is often a lot more than sellers, particularly to build the business themselves,
Mm-hmm.
where when they set up the business, most people are really just out there to make a living and like quit their jobs, not have to do freelancing anymore.
Yeah.
So 10, 20, $30,000 a month is a lot of money and can sustain like whole families. Whereas from a buyer perspective, particularly if they're looking at it from an investment point of view, and chances are they have a lot more and are more financially savvy in that respect.
Yeah. One of the interesting things for me going through selling Sifter was that it can actually be a little more challenging selling a smaller business than a larger business.
Mhm.
Is that something that's held true? And kind of if so, what's the threshold for that, and why is that the case?
Yeah, I mean, I say in general, sales times for smaller businesses are a lot faster, and valuations can often be higher just because there's so much demand at that level.
Hmm.
But there really is a real range. I'd say the main reason they can be harder to sell is in advance. That's where you can spend a lot more time because usually at that level, let's say a small business is $100,000 versus say $1 million SaaS business. Generally speaking, people who run $100,000 business is probably a side project for them.
Hmm.
If it's not a side project and that's all they're working on, then they might not be particularly financially savvy. So not having their books in order is extremely common. Whereas for $1 million business, it's less likely.
Yeah.
Things like metrics, again, most owners of smaller businesses won't track that as well as larger businesses. So I say, I mean, in general, they're not necessarily harder to sell. They can often just take more time proportionately than bigger businesses, and that's really just a lack of initial preparation or, I guess, sophistication.
Yeah. Which makes sense. I think most developers on those smaller projects, I mean, even for me with Sifter, I knew enough to kind of keep up with bookkeeping, but it was the least exciting part of it all, and it was
Yeah,
not the
absolutely.
place where I wanted to spend my time.
Yeah.
Uh, Although in hindsight, now it would definitely be something that I would give a lot more attention
Hmm.
earlier on. So with buying and selling SaaS, SaaS is obviously in its own way a very kind of unique business, especially with recurring revenue, and they don't just start shrinking overnight like churn and stuff. As long as you generally will have a healthy plateau where the business can go on fairly indefinitely. And obviously I experienced that with Sifter and going through 3 years of working on it really inconsistently depending on what I was juggling. um, so how does that translate into making SaaS different in terms of buying and selling, and maybe how it affects the valuation, how it affects the perception, or I guess you kind of mentioned a couple times that it's becoming a more common thing for people to be interested in and want to buy, and funds kind of coming down market and buying smaller companies. So what would you say makes it different than other investment vehicles or other businesses that aren't necessarily recurring revenue based?
Yeah, so I mean, the other main business models we focus on are e-commerce businesses and then content-based businesses, whether that's like Amazon affiliate or AdSense.
Yeah.
But so compared to those business models, one of the main things is valuations are almost always higher than all of those models in almost all situations. And I think one of the main reasons for that is just the barrier to entry to building a SaaS product and getting traction is a lot higher and harder than some of the other business models. So naturally, it's like a more defensible business. You could often, I always say to people, with a SaaS business, you can often just close the doors for any new customers, and that business is still going to make money over time.
Mm-hmm.
Whereas you do that with almost every other business or business model, then it's
It's
not.
not going to
The
happen.
valuations are higher, and I definitely don't see that slowing down anytime soon. From a buyer perspective, it's a very competitive space at the moment for buying, particularly in the last 12, 18 months. Whether that's because we've got better and built a bigger list of buyers, which is definitely true. But also, I just think more and more interest from people in buying SaaS, whereas previously maybe not quite as popular of a business model, maybe due to like lack of understanding, or like say like some funds looking at bigger businesses than they do now. So I think it can be challenging for a first time buyer to get a deal over the line in the SaaS space. So some of the things we were talking about earlier, making sure like you're well prepared with exactly what you want
Mm-hmm.
when you buy it, what you're willing to spend, and then building a relationship with a broker or advisor or advisors or brokers, um, and letting them know what you want. It means you're going to be in a much better position because they'll be able to send you opportunities that are a good fit as soon as they come out, and then you're going to be probably competing against less buyers. And from a broker perspective, while we represent the seller in the transaction, it's in our best interest for a deal to get done. So
Mm-hmm.
if we think a buyer is particularly serious and they actually are going to buy a business, then we are going to spend time with that person to make sure they do buy something that's a good fit. So I'd say that's really important. A lot of buyers come in and they might be a bit worried about the fact they're a first time buyer or be a little bit intimidated by the process. But ultimately, while we don't work for you, we'll still work with you to make sure that you can actually successfully buy something. From the sell side, I'd say one thing a lot of SaaS owners can underestimate, and there's a lot of feedback people get about us, is the process is quite complex and does take some time. SaaS businesses really aren't that easy to sell, which is part of the reason we've done so well in the space. We put so much time and resource into like learning it, building out relationships with people in the industry and our own knowledge. That a lot of other brokers and advisors and people trying to sell themselves really struggle because they're not very simple businesses at all. So having that specialist knowledge is quite important. I'd say also selling a SaaS business is not really something you can do with 1 or 2 pages of information. There's a lot of data gathering required, whereas with like a affiliate site that gets search engine traffic, you can really buy that business with a few lines of information if you're an experienced buyer. Whereas for the SaaS business, it's basically impossible because of the complexity of operations. You've got the back end code, most likely some unique IP there. So the due diligence and general things you need to know, there's a lot more. I mean, I guess that's offset by the fact valuations are higher. So you probably spend a little bit more time on the process, particularly up front. But once the process starts, SaaS businesses are probably one of the quickest business models we sell now. And also valuations, like I said, consistently outperform most of the other main business models too.
Right on. Okay. Well, so that kind of brings us towards the end. Is there any other just kind of key advice or parting ideas and concepts that you'd want to share with people, and other than at least talk to a broker, because it's, you have nothing to lose, but what would you tell somebody, I guess on either side, buyer and seller?
Yeah, I mean, I think we've been quite comprehensive with the Q&A so far. I think from a seller perspective, other than the obvious start the conversation early, be aware of the timing of a sale. A lot of people come to us maybe when it's not necessarily too late, but they come to us if it's a side project for them, or maybe they're a bit out of their depth and the business is beginning to like plateau or maybe even decline. That's when they start the conversation or start thinking about selling. But from a valuation perspective and just a saleability perspective in general, selling at the right time. So ideally when the business is still growing. While that might seem counterintuitive, people say, well, why should I sell a business that's still growing? And that certainly makes sense. But from a saleability perspective, valuation perspective, sell it while it's growing. It's going to be worth significantly more and sell faster than the business that's declining or plateauing. So I'd say my main advice there is don't be afraid to sell when it is still growing. And that really is could be the best time. From a buyer perspective, I'd say one of the main mistakes I see buyers make, particularly in a very competitive buying space that it is, or buying through a broker or advisor like us who has pretty large lists and a good reputation, we do get businesses sold quickly and at very good valuations. So a lot of buyers come in and their main criteria is just getting a good deal financially. So they like to feel like they're paying less than market value for a business. And to be perfectly honest, if you're working with us, it's highly unlikely you're ever going to pick up a bargain for a business. So I think the areas you should be looking at when getting a good deal is not really in the price, but looking for a business that's a really good fit for you, a business you can grow, a business that has synergies with anything else you might have in your portfolio if you're a buyer like that, rather than just focusing on price. Which, to be honest, if you manage to grow a business, or you can add value to it, then what you've paid is pretty much irrelevant straight away. So I think bargain shopping is not necessarily the best way to go, particularly through a broker. I mean, there's always possibilities to pick up failed projects from people, but that's not really what we focus on. And I think there are much better opportunities buying a business that's growing, even if you do feel like the valuation is high.
Yeah. That's good stuff. All right. Well, this has been awesome. Thanks so much for taking the time. I appreciate it, and obviously appreciate all the help with Sifter. back when.
Yeah, cool. Thanks so much.
Yeah, thank you.